All Access show possible. Really excited to have them on board. And like I said, you can get involved at ticker.com and get stock perks. We're going to play that video right now to explain how to get started.
What is ticker? That's right, ticker with two I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
Get involved at ticker.com. It's been a really exciting year here for All Access and for Benzinga as a whole. As I mentioned, we're doing our fourth quarter meeting for the entire company today. We have a lot of exciting stuff going on. So, of course, we're in different locations. People are moving around. Big props to producer Aaron Thomas, who also makes every single All Access show possible and is wearing many hats today, performing many different duties, bringing All Access to you live, running the fourth quarter meeting, putting up with everybody's antics, and getting everything done. So we want to give a mad shout out to our producer, Aaron Thomas. And of course, we want to thank all of our guests that come on All Access as well. We've got a really exciting conversation coming here today with Bryan Freeman from Real Good Foods. We're going to talk about the food industry, how they're shaking things up, what their growth looks like, and some really impressive stats that have been coming from this. Well, it's a great company to keep an eye on. So without further ado, we're going to jump in and start with our single company presenting an All Access today and bring on Bryan Freeman from Real Good Foods and get started. Bryan, great to have you here. How are you?
Hey, Michael, nice to see you again.
Always great to have you here, Bryan. It's a really exciting day. Like we mentioned, we're in our fourth quarter meeting. We've got you here on All Access. A lot of great stuff going on here on a Friday to close out the week. Let's go ahead and get started. For anybody that wasn't here in our investor audience the first time around to speak with you in Real Good Foods, give us a high-level overview of the company and what you guys do.
Yeah, I mean, at Real Good Foods, we're just modernizing frozen food right now. For us, that means our job is to make craveable, delicious items, products, food that we all want to eat, but take the carbohydrates and sugar out of it and replace it with protein. You know, when you think about over the years how our food system has just put a lot of grains, carbohydrates, and sugar into the things that we want to eat, what it's led to is a lot of problems, health problems. You know, a third of the U.S. unfortunately has either diabetes or is pre-diabetic. 57% of all U.S. adults tried to reduce their carbohydrates over the last 52 weeks. 40% of us are clinically obese. And, you know, I don't know about you, Michael, but if left to my own devices, I'm going to eat a lot of Mexican food. I'm going to eat pizza. I'm going to hit the lasagna really hard. And, you know, we just figured out that we got to stop doing this. We're not going to stop eating and craving what we want. What we got to do is get the grains and carbohydrates out and replace it with protein. And so we started that journey about 5 years ago. And the good news is we've grown really fast. We've gone from essentially a small little D2C business doing about $500,000 in revenue online. And, just this last quarter, we updated our guidance and we're guiding towards 155 million to 160 million of revenue this year. And we think that, we can get to $500 million in revenue in the medium term. That's our goal to get there in the next 3 to 5 years. And it's just because we're satisfying a big need, and obviously the food's got to be delicious. So that's our mission. For me personally, it's really cool to, actually, I feel like, we have an opportunity to make a difference in people's lives, but at the same time, build a big business that, has an impact. So that's what Real Good Foods is all about.
Well, it's awesome, and I'm glad you mentioned that. It's funny. There's a Mexican restaurant that's not too far from where I live that I go to with my brothers every single Saturday. It's like our weekly tradition. So I know what you're saying, right? If I had a choice, I'm going to go to that Mexican restaurant. It's called Puerto Vallarta. I do it every Saturday. I love that food, right? And it kind of plays into our next point here, which is if we're going to continue with the same habits that we have and everything, what are some challenges that you think you and Real Good Foods have faced in this industry where you guys are bringing health and conscientious choices to an industry that oftentimes seems to value quickness and efficiency and just getting that quick food that tastes good, makes us feel good, and we go on about our day? What are some of the challenges in introducing this healthy style to this kind of food?
Yeah, I mean, convenience has always been the hallmark of frozen food, and we're no different. Most all of our items are microwavable, just like what you would expect to get out of frozen food. The trouble is as I said before, frozen food really isn't good for you, what's on shelf, just because of the way it's designed, not, the convenience factor. So what I'm really trying to say is there's a lot of brands out there that market themselves as better for you, but in the frozen food section. But when you flip the package over and look at the nutritional fact panel, there's no difference between what's in that product and, say, a Hot Pocket, loaded with carbohydrates, sugar, and very little protein. Here I've got, our enchiladas. And, what we did here is we made a tortilla out of chicken. It's really delicious. And, instead of 25 to 40 grams of carbohydrates, we've only got 3. And this particular product has 38 grams of protein. So, we make everything from scratch over here. The sauce is a fresh tomatillo sauce where we're bringing in the fresh produce. And, it's just beautiful food that, the more of it you eat, you're just taking in protein and leaving aside the sugar and carbohydrates, which Michael will allow for a couple of beers when you're out there with your buddies eating Mexican food. And by the way, it is Friday, so want to raise that as well.
Looks like we got both of us back at the same time. Brian, can you hear us okay? Everything good on your end?
Yes. I was just talking about beer.
My favorite part. I missed it. Great.
Yeah.
Well, no worries. Looks like we've got you back now. We had a little bit of a connection issue for a second, but no problem. Finish your thoughts, start off wherever you were, and then I've got another point I kind of want to build off with where you were going.
Yeah, I was just talking about our brand attributes, but let's go on to the next question, Michael.
Perfect. Well, so I like where you're going with that. And I want to talk a little bit about how this all comes together, right? With your approach to the food industry and what you guys are doing to bring health into it. Let's talk through how you source the ingredients for your food. How do you guys put this together? What does the process look like start to finish in your manufacturing, your production, the process of your products actually getting from your facilities to getting out there in those stores and ultimately to consumers' tables?
Yeah, sure. So, first it starts with the team. Our management team has decades of experience. Me personally, I've got over 20 years in the frozen food industry. And so for this industry, it really does take a experienced team that's used to running large businesses of scale. Myself included, we've all been parts of SLTs of multi-billion-dollar businesses, and our board of directors is no different. And so I think the food business, because it's been consolidated and is dominated, in the case of frozen food, by 3 large multinationals, experience matters. And so you use that experience to put in state-of-the-art manufacturing processes and plants that can execute and make sure that we're not converting our raw materials at a disadvantage to the multinationals. And so, to that end, when we went public regular way back in November, those proceeds from going public went into the business. It did not go to any shareholders, and was used to build a massively scaled plant out, in Bolingbrook, Illinois. That plant can convert, has conversion costs no different at the same low rate as what you would expect for a multinational. So today our manufacturing footprint is 2 plants. Today, I happen to be in our City of Industry plant, which is located in Southern California. And then our new plant that came online in March in Bolingbrook, Illinois, is where over 90% of our products are produced. The other point I want to make is we don't just assemble components. We take raw material, in the case of our proteins like chicken or beef, it's coming in raw, we convert it. Why is that important? You need to be able to do that in order to make margin and be a profitable business. And to that end, we have publicly said that we will be adjusted EBITDA positive in Q4, and we will be EBITDA positive in next year. We brought that a full year forward from when we went public. Our guidance in November of last year was EBITDA positive in 2024. When we saw the markets turn over, we got together as a team and said, look, yes, We believe we can grow this business at a high speed, but we're going to do it responsibly and make sure that we're making money and we're EBITDA positive. And so, if you look at our guidance for this year, we almost doubled the business. We like, what we're seeing in our new products, which I know we'll talk about in a little bit, that will continue strong growth. But we're here to be EBITDA positive in next year, 2023. But it all starts with the manufacturing footprint, Michael.
Absolutely. Makes a lot of sense. And you mentioned a couple of things there that we're going to dive into. And I want to get more of a realistic picture of the entire landscape around you guys too before we do that, because it's a point that we like bringing up with a lot of the companies that come on All Access, because the last couple of years have been turbulent, I think is a very safe word to say. And for you guys specifically, right, with the shipping and the manufacturing and everything that you guys are doing in your industry, how is the COVID pandemic and especially the economic times we've had over the last years? It's been a choppy 12 to 24 months. Has anything changed in your business model, the way that you guys do things? Has anything been affected? And how have you guys handled the last couple of years overall as a business?
Yeah, I mean, look, it's been tough. I mean, you listen to everybody's quarterly calls. We saw things occur over the last 6 quarters that never had happened before. Difficulty with labor, difficulty with suppliers, unpredictability. We managed through that, obviously, we're able to grow the business. But I'd like to talk about where we are today. Here's where I can give you some of the good news. Number one, labor markets have settled down. The biggest impact to margins and to the supply chain last year, and I would say Q1 of this year, is just reliability of workers showing up. What we're seeing today is attendance rates back to normal, well above 90%, and people want to work. So labor has stabilized. Secondly is commodity costs. You hear a lot of companies talking about high price of commodities. Good news at Real Good Foods is our poultry, which is our number one commodity that we purchase. We buy over 1 million pounds a month of raw poultry, has really come down significantly in the last 4 to 6 weeks. To give you a perspective, for a typical spec that we use for our products, the historic mean, going back 5 years, has been somewhere in the $1.45 to $1.50 per pound cost basis. We saw in Q1 and early Q2 pricing as high as over $3.60. Incredible. I've been in the business a long time, never seen anything like that. We got through it. Happy to report today that we're buying poultry now in the 165, 160 range. So we're starting, the material's starting to turn over, and we expect it to revert back to the historical, 5-year mean, which is material to our business and profitability. We're seeing that in paperboard. We're seeing that in freight. So lots of relief is coming and is already here, and we're going to take full advantage of it.
Absolutely. So, okay, great recap there of the landscape of where you guys sat and how things have affected you guys. So let's talk about recent events then, right, and everything that's exciting going on right now. The release that you guys had of your Asian entrees, the orange chicken, the General Tso's, all this new stuff you guys have brought out. How's the market reaction been to that, the consumer reaction been to that so far? And how are your new products rolling out to the market and getting received by the general public?
Yeah, I mean, this is what really excites me personally. We are a hit-driven business, and we launched a high-protein, low-carbohydrate chicken nugget and chicken strip into the marketplace a couple months ago. I've never seen a product go from just launch to number one. It is the number one better for you frozen breaded poultry item in the retailers are at. I've never seen that happen. And we're actually in the top 15 percentile of velocities of all items in the frozen poultry and meat section. Okay, so that what that's telling you is we're outselling the majority of Tyson and Purdue SKUs with our item. And on a dollar per facing standpoint, these are very productive SKUs, selling close to 4 times what a enchilada would sell for, or what a typical Amy's entree would sell for. So we've got a winner here, and our job is to just grow the distribution, and I like our chances of that in 2023. Asian entrees, the story is similar. When you look at orange chicken, if you go to Panda Express or whatever, product's delicious, but the problem is it's got over 40 grams of carbohydrates, 25 grams of sugar, okay, per serving. Our solution delivers only 3 grams to 4 grams of carbohydrates and 23 grams of protein, 1 gram of sugar. So that product is coming on shelf now. I love the velocities we're seeing. It's in the top quartile. And so I think that's really going to be our growth story for 2023 and frankly, Q4 as well. Again, I'm a pretty optimistic guy. The velocities we're seeing exceeded even my, expectations. So, and the good news is we've got the capacity because we've made the investments in the plants in Q1 and Q4 of last year. And so it's a pretty nice setup right now. And then when you see where the stock's trading for those value investors looking at us, we're trading at like 1 times our guidance for this year. So I think it's a great entry point for investors as well.
Awesome. Okay, and talking about the entry point for investors and everything else, if we've got a line on how this is being received, and clearly things are going well with this so far. So take us through your Q2 earnings report. How did this reflect in how you guys are looking at this from a financing standpoint, where the company sits on a business standpoint right now? Any highlights that we can pull from, and anything to look forward to in Q4 as well on the financing side, the marketing side, and clearly, like I said, with things being so well received, what are the growth points to look for over the next couple of months?
Yeah, you bet. So for Q2, we didn't get the benefit of our innovation, and our Bolingbrook plant, the revenue generated out of that plant was not, it still was coming online. So I think what we're talking about in terms of meeting our guidance, it's really playing out in Q3 and Q4. Remember on the Q2 call, we raised and beat guidance. It was our third consecutive quarter of raising guidance we're guiding to 155 to 160 for the year. And so, and I think for 2023, where consensus guidance is from the folks that cover us over at Jefferies, William Blair, Truist, and Roth. I mean, I think consensus estimates for next year have us right around 195 to 200. And, and again, in this marketplace, I think it's important to be EBITDA positive, and that's what we're working hard to achieve. But, you layer on the innovation and the success that we have, I feel good about the coming quarters. At the end of the day, velocity is everything in this business. What's velocity? Velocity is, how many units are you selling of your product versus your peer group per store per week. And, if you're at the top 15% of an item, the prospects of growing distribution in that item are very good.
Outstanding. Now, again, when you're talking about that growth too, and some of these prospects, a real feather in your guys' cap is that you are actually in the top 15% in terms of velocity in your sector, or your industry, your specific group. It's obviously a testament to what you guys are doing, and everything you just covered sets us up to understand why you're in that top 15%. But going forward, with all the growth that you guys have, and obviously a lot of positive catalysts, I want to take a look at your industry really quickly too before we close. Right? There's a lot of things. Again, we talked about the turbulent markets, we talked about the choppy supply chains. Is there any road bumps or potential issues that you see in our market when it comes to rising inflation and the Fed doing everything that they're doing? Anything that you see as far as issues for your entire industry, but for you guys specifically, that you need to be on the lookout for, and you guys are going to be looking to address over the next couple of quarters, the next couple of years?
Yeah, I mean, I think that the Fed is sort of behind the times. We're seeing commodity prices coming down. Okay, so I think that this inflationary impact from what we're seeing on the commodity side has already abated. I'd like to just go back to the industry though, frozen food, and remind your audience that frozen food in the U.S. is a $58 billion category. It grew at approximately a 6% CAGR. Within the frozen food industry, products that are like ours that are marketed as better for you account for about $9 billion of revenue, growing at a better than 6% CAGR. So, we talk about our guidance of 155 to 160. We're still a small business with a huge TAM to go attack. So you overlay the size of frozen food, 58 billion, and then go back to the fact that, you've got half the population trying to reduce their carbohydrates. So to me, and I can tell you as a management team, we think that we should be growing even faster because of the huge opportunity, and that's what we're working against. So big industry, highly differentiated on trend brand, and we just are going to go execute over the coming quarters.
Outstanding. Well, it's exciting to see, Brian. It's always a pleasure to have you here. Every time you guys come in, it seems like there's something new and exciting in your pipeline, and the positive story just keeps moving. So there's a lot to look out for here. Obviously, a lot of exciting things in the future, a lot of stuff coming up in the rest of 2022, even though we are here in the beginning of Q4, and it seems like we just started Q1 a couple of days ago sometimes. So, Brian, always great to have you here. Thank you so much for joining us.
Thank you, Michael. Nice to be here.
Brian Freeman, CEO or Executive Chairman of Real Good Foods, traded on the NASDAQ as RGF. Always great to have him here. We did only have one company in All Access today. And of course, we have lots of things going on here. Going to wrap up the Q4 meeting. Once again, shout out to Aaron Thomas, our producer, for juggling everything up in the air and making sure everything comes together. So thanks again to all of our companies that join All Access every week to speak to our retail investors. And of course, thanks to our sponsor, Ticker, as well. We're going to play their intro video one more time to explain how to get started with Ticker, and we'll close out here.
What is Ticker? That's right, Ticker with two I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
Fantastic. And that is everything we have here on All Access this week. A couple of news headlines to look out for if you're tracking the markets today and everything going on there. We did our usual news clips today, which is where we kind of cover the markets and everything that's going on. There's a couple of things actually that we had our eye on. One is the e-cigarette company Juul. It's been preparing for a possible bankruptcy filing. It's clashing with the Food and Drug Administration about whether it can keep its e-cigs on the U.S. markets, considering restructuring options, including bankruptcy. So obviously something interesting here because you want to keep an eye on that nicotine industry, which is all over the place in terms of products, in terms of regulations and stipulations and everything else. So something to watch there on the Juul company. Another thing that we found particularly interesting, and our news desk had a field day with this morning, but ByteDance coming out and sharing a financial report with employees that offered a glimpse into the private company's closely guarded finances. They grew 80% to $61 billion, but it also spent $16 billion on marketing in the year of 2022. A lot of that on rival platforms. So a story to check out here. Obviously, go to benzinga.com, read the headlines. Our news desk did a terrific job with analysis of everything ByteDance is doing with their marketing spend. But compared to platforms like Meta, Facebook, they spent a fraction of what ByteDance did for marketing, specifically TikTok, which ate up a huge chunk of their marketing budget. So a couple of interesting stories there. Lots more on benzinga.com. You can always learn more there. Thank you again to all of our companies that sponsor All Access. Come in and talk to our retail investors. And thanks to our sponsor, Ticker, as always. We'll see you next week on Benzinga All Access.